I'm Priscilla Barrera with the Investing News Network, and here with me today is David Anonychuk, Managing Director of M.Plan International. David, thank you so much for joining us today.
Thank you for having me.
All right, since it's the first time that we're speaking, can you let our audience know what is your role right now?
Sure, I'm the Managing Director we're an independent consultancy. We do resource estimates and studies for junior mining companies, as well as due diligence for financial community in the specialty minerals and metal space. So namely lithium, cobalt, graphite, rare earth, and high value industrial minerals.
All right, and we're here at the Mines and Money Toronto, and yesterday you were part of a panel discussing battery metals. What was your main takeaway from the panel?
Well, there's a lot of excitement. If you look at even some of the other talks that happened during the day, they had a competition. They had a gold project, they had a zinc project, and a graphite project. And the panel voted on the one that was the more interesting, and they chose the graphite one. And it's obviously very topical today in terms of what we hear on the battery metal space. So I think there's a lot of interest in the room just to hear what people have to say.
Right. And there's been a lot of talk about battery metals, as you said. We have lithium, cobalt, nickel, maybe to a lesser extent graphite. But what would you say you've seen as the most interesting battery metal this year? Do you have a top pick from those?
It's hard to say to pick one. I think the story is quite interesting for all of them because they're all going to move together. Based on the demand that we're going to see from electric vehicles as well as the energy storage space. I think one thing to put this all in perspective is we probably hear the most about lithium right now, and that's probably the one that's most well known in terms of what people are talking about demand. Looking at today, people are forecasting somewhere around quadrupling demand around 2025. If we compare that to cobalt. Looking at cobalt demand today of somewhere between 120,000 tons of demand for cobalt, it's going to double sometime around 2027, 28, based on some of the leading third-party forecasts, and then quadrupling somewhere around 2035. So cobalt is gonna lag a little bit from lithium from a demand point of view, but that's where on the cobalt space it gets quite interesting from some of these primary mines that are going to have to fill the gap because cobalt, for example, is heavily basically just it's a byproduct of either copper or nickel from that point of view. But like I said, between both, I think the highest interest that we see is definitely on the lithium and the cobalt space right now.
All right, and let's talk then specifically about lithium. We know you have a background in base and precious metals. Can you let our audience know, maybe briefly, what are the main differences that you see when looking at a lithium project compared to those metals?
Yeah, what's interesting on any of these specialty minerals and minerals, in terms of the development risk phase, if we look typically at precious metal or base metals, it's more linear in their approach between exploration, the metallurgy, looking at the market. There's no, whether it's a gold or copper project, there's not a lot of question on the marketing side. Those terminal markets are quite well known. If we look at lithium, for example, it really doesn't have its own terminal market. But even in the development risk side, when you go between exploration and even the next step metallurgy, there's a lot of test work that needs to be done to understand and unlock, what are those minerals and how are you going to economically process them and what are the end use markets. So there's a lot of iterative work when we do, work on studies to try to unlock, value for those projects. So it's like I said, definitely a lot more iterative that way. And that's where the value creation happens way early on in that process.
All right. And looking ahead maybe to next year, what do you think can be some of the factors that could impact the market and maybe the ramp up of these projects in the lithium sector?
Right now, the biggest question I think everyone asks is on the financing side. I think there's a lot of interest out there, but the other thing is maybe what's keeping away some of the financial community is having that deep technical understanding behind these projects. And that's obviously the service that we provide under M.Plan International, is to be able to work with as well the financial community to do due diligence and look at some of these projects and help evaluate and understand, what is behind them. But I think it's quite interesting because the geographies are quite diverse. We see, like I said, new entrants. A good example, I think, is Peru. You have, now example, a company like Plateau Energy now that's out there. It's not just the brines in South America. Now you have new entrants. You have confidence now in Quebec, for example, with Nemaska Lithium, that raised 1.1 billion, which is a fantastic example. But and a few weeks ago in Toronto at a luncheon, Guy Bourassa, the CEO of Nemaska Lithium, gave a presentation, and he talked about how challenging it was to raise his 1.1 billion. And in order to get there, he had to raise first approximately about 70 million with the demonstration plant, then to convince the investors, then to get to that 1.1 billion. So there was a lot of work that needs to be done. And specifically in lithium, he mentioned that there's, based on forecast demand, there's another $15 billion that needs to be raised to meet that demand by the mid-2020s. So I think that's the interesting part, but I think you need to really know what you're doing on the technical side. And of course, we're happy to have a role in that as this industry develops.
All right. Then my last question for you today, what would you say is the next battery metal to watch? Is there any of them that you find interesting?
Definitely. I think the one that we didn't talk a lot about on the panel yesterday was vanadium, and it does deserve a place in terms of the discussion. A lot of the focus out there, especially because of the automotive side, is all electric vehicles. But we should also be cognizant to talk about the wider energy storage space, because there are a lot of competing technologies, of which just lithium-ion battery is one of the competing technologies. And I think vanadium definitely deserves its place. People are talking about out there what percent of demand could they take up. I've heard numbers as high as 20%, and some people say that's high, but there's definitely a core of what vanadium can do in terms of servicing that type of market. And we're definitely seeing activity on our side in terms of looking at different projects and doing due diligence and studies from that point of view.
All right, David, thank you so much for joining us today.
Great. Thank you for having me.
Once again, I'm Priscilla Barrera with the Investing News Network, and here with me today was David Anonychuk, Managing Director of M.Plan International.